Small cap, AIM-listed oil and gas producer Angus Energy has recently posted widening losses on increased admin costs and an impairment charge. But at the same time, it issued a promising competent persons report from its Lincolnshire Saltfleetby gas field. We're talking now to Angus Energy Chief Executive George Lucan about, George, what you described as a transformational year. Update us on where we are.
Right. What we have here in this competent persons report is independent third-party verification of what we always understood to be the case, which is that this asset's immense value to shareholders and is a credible and real opportunity. But more than that, the report lays out the fact that this field generated gas steadily for 20 years on a known curve. We're resuming that curve. We can tell you what gas it should produce for the next 10 years, and therefore transformational for the company in that we have been an exploration company largely up to date with a very small amount of production. Now we're a production company with a very small amount of exploration. And whereas we were in a constant series of cash calls on shareholders to support that production, now we're moving into cash generation and returns to shareholders. So I'm hoping this is a completely different Angus that we're looking at today.
Are you yet connected to the grid? I know that was going to happen in 2020.
We're not yet connected. It does require planning permission. I do hope to update the market very shortly on the status of that permission. So we've basically got two bits of planning to do. One is to connect 600 meters of new pipeline from what used to join to the Saltfleetby refinery, but will now connect directly to National Grid's own entry point, which is next door. So that's the one bit of application. The second bit of application is to put process equipment on the actual Saltfleetby well site. When I say process equipment, basically what you do is you have to compress the gas because gas travels to the grid at 75 times atmospheric pressure, 75 bar. And you have to cool it down during those compression stages enough to take out any impurities. That's all it is. There's a fair amount of power generation that goes with that, which you can derive from the gas or the field itself. But it's not a lot more complicated than that. And we're in a very favorable time for procurement because the industry, not only onshore but over in the States, is in the doldrums. And as you know from the present oil price, shale in particular, which has a gas element to it, and compression equipment, a lot of compression equipment involved, is in terrible trouble, and you're likely to see a lot of shale operators go out of business in the next month or two. So there's a lot of kit. It's a buyer's market for kit, and kit is the big spend here. Some of that kit will be pure capex, some will be lease, but we're in that process now.
Who's going to buy this?
We've got two potential off-takers. We've got a contract which I hope we will be able to announce the signing of within a reasonable period of time, this year at any rate, if not this half. Essentially, there's quite a number of gas traders that play in this field, but there are also the traditional familiar household names, BP, Shell, all of these guys. They'll take your gas and handle the grid for you.
What about the risks left now in this asset that you're presenting to investors? Is there much in terms of risk left?
No, there really isn't a lot of risk if we are competent at the delivery of the basic connection and of the process equipment. In other words, a very, very, very high level, I'm talking well into the top 90s, that the production curve that existed over the last 20 years is extendable for another 10 years. So that's an extraordinarily high level of competence. Then there's issues around timing. Now, you've all seen today that COVID has locked down all sorts of manufacturers of basic equipment. We are looking both at new build, turnkey solutions, and at second-hand. We've made it clear to all the bidders, there are some 8, 9 or 10 bidders for various bits of kit, that we want the quickest as well as the cheapest. So My biggest worry is that we just are caught in the general delays of getting hold of things, but giving people a broad spread of things to look at. We allow them a lot of latitude of the sort of kit they can supply. We should be able to find something. Already some suppliers have identified kit all over Europe, and we've got our sort of fingers slowly going down over them. Remember, we're only 40 miles from Immingham Port, which is where this stuff will get shipped into if it's not made on shore. So we've got I've got a degree of confidence about timing here, but like everybody, we know we're in a good time.
I want to ask a couple more questions around COVID-19 or coronavirus in just a minute and take a look at the broad overview for the company and what you're doing about it as a small cap business. But I want to move on, if I can, to take a look at what's happening at Borkham now. You own 25%, I think, of this asset, don't you, and operate. What's happening down there? Because that clearly has not got the same sort of positive news that we're getting around Lincolnshire.
Yeah, what happened there was the planning officers have recommended to the council against our proposal. So it hasn't gone to council meeting, and we'll have to evaluate whether or not we want to maintain that process and try our luck with the council, or pull the application and resubmit. To give some background on that decision, the report was actually quite favourable in all of the technical terms that we concern ourselves about. So in terms of noise generation, visual amenity, and so forth, the planning officer was saying, well, you've ticked all the boxes. But what he's saying is ultimately, this is an area of outstanding natural beauty. And we allowed the developments to date on the basis that government energy policy was very clearly supportive. And we haven't heard enough supportive statements in the last year for energy security of supply on shore to outweigh the disbenefits of doing work in an area of outstanding natural beauty. We believe we've got some strong arguments there that we didn't go into our initial application. We believe we can also beef up the local environment benefits, which we genuinely are providing some jobs, but B, spend locally. And C, I want to share with you something. You can see from the diagram that you see now, it's a Google Maps satellite image of the area, quite how well shrouded this entire site is, both from the road, from neighbouring houses. It's virtually invisible to your random rambler on the in this area of outstanding natural beauty. We've got a very low footprint. We've been so careful about noise, about emissions, and very careful about community liaison. We've also we and our partners have put £4 million into the ground here with repeated planning approvals along the way. I'm not about to give up on that. I believe we've got a legitimate expectation as ratepayers, taxpayers, and ordinary commercial entities to get the best possible hearing for our application, and I do intend to pursue it. We have some confidence about this.
What about the well itself? What sort of production rates have you been getting in your testing?
It would be unfair to go off those figures because they were very high indeed. As you know, when you first open up a well, you get immense slugging of oil, spurts of oil. So if I was to tell you that it was 1,000 barrels a day on a daily equivalent basis, it would be wholly dishonest. Our technical team would like to get steady flow rate of at least 300 barrels a day, which is a good number. And that's not the traditional J curve where you have 300 barrels a day for 6 months and then it disappears to 20. The reason that we'd self-limit the initial flow is precisely so that we could maintain a good figure like that. That would be a solid figure for us.
So just to confirm, what is it you're waiting for now from the government to give the go-ahead for this project?
Well, it's initially from the council. We still want to deal with this on a detailed basis. But if government were minded to make some positive statements in favour of wanting to continue with an onshore industry which employs people here locally and produces oil at a lower carbon cost than we're currently importing it, it would be helpful just to hear even relaxed ministerial pronouncements on this issue. If they're not refreshed regularly, there is a tendency of councils to say, well, they're not current, therefore we'll ignore them. But we do believe the government does support onshore supply for a lot of reasons, security and the lower carbon cost.
Yeah, just want to move on if I can, take up on the point I mentioned at the very top of the interview about increased admin costs. What's your burn rate at the moment in terms of cash that you've got on the balance sheet?
Presently, we just raised, as you know, another 1.4 million. I believe that cash is sitting around north of 4 million right now. We've got an immensely slender board and a low number of full-time employees. I'm nervous to give a cash burn rate because as we move into Saltfleetby, we kind of aggregate a lot of third-party contractors and consultancy work, which skews any cash burn figure I could give you. But we've got 9 full-time employees. Our total executive board probably has the aggregate pay is slightly less than the remuneration of a chief executive of one of our competitors. But so we are quite lean as a company, but we're not. When we talk about cash burn, we're moving into a project, we will aggregate people around us to get it done, and that skews it. I can't give you the answer overnight. Sure.
One of the other things has been some reporting of some boardroom unrest. Is that now all behind you?
That was, well behind us. That was a clear before I joined back in January of last year, and we're quite a happy functioning board. Small, 3 executive board members, 2 non-execs, all flat pay scales, as you'd expect in a small AIM company.
Okay, let me pick up on the point I mentioned about the coronavirus and COVID-19. What it means for a small cap company like yourselves that you rely on being able to communicate and do deals with other companies as well as your own staff. How difficult is it to operate in this current environment?
Well, so actually we haven't had any issues at all. So we have these Zoom meetings that we're having now. We have them 2 fixed a day and probably 5 a day. Most of the work right now is planning. It's desk-based. Luckily, just before we went into lockdown, the field work we needed to do was things like noise monitoring, watch birds and bats and what you will, actually stuff on the ground, that we had happily done just before we went into lockdown. So what you're doing now is detailed plans, designs, calling potential suppliers, getting their readiness to supply. So I would say we've been more productive in the last month than we have been for some time, so quite by happy accident. It's also been a very useful experience. We're communicating perhaps because we have up to 12 people on a Zoom call, sharing information much better than we would be able to, because we got people distributed all over the country. So now here we are, twice a day, forced to actually communicate and share things on a minute-by-minute basis. I think it's great. I mean, I think we'll also, when we're looking at office space, when we come back into normality, I will be questioning whether we need to have as much office space as we do, whether we can make savings there and operate some remote working policies.
Very, very interesting point. Just want to finish up, if I can, by taking a look at what's in your intro in terms of what you're doing at the moment and what is the projected news flow expected for the remainder of 2020.
Well, I do hope to update shareholders with a kind of little teleconference in the next 3 weeks on all these matters. But what's essentially going to come out is you're going to hear take-or-pay contracts, take-off contracts for the gas, hopefully a progress with Borkham of some sort, definitive progress, applications going in for the gas field to Lincolnshire, and detailed designs which we'll be able to share with shareholders what goes onto that site and the rough cost of each element and the timing on which we'll hope to get it on. As I say, not yet hopelessly delayed by COVID, but we listen to suppliers and they are telling us that things are going to be harder than they were. But we're not being told, oh, forget it for a year or anything like that. But we're talking difficulties.
Just want to bring up the share price very quickly, trading just over half a penny at the moment on the AIM market. What's your message then to shareholders, and what do you see as the catalyst to get people to understand what you're trying to do here at Angus?
I still believe the catalyst is actual connection and gas sales, and I don't believe after the difficulties of the past that much less will persuade our shareholders that we're fit for purpose and we're up there and fighting. Do I think that the valuation in that report's real, i.e. 25 million, and do I think that down here at 4 million is too big a discount? Clearly, yeah, it's too big a discount because the risks of failure to reconnect are negligible. Nonetheless, you've got to appreciate people have become skeptical of Angus, and we have to fight to win back shareholders' approval. And the easiest way to win it is, frankly, to sell the damn gas for cash and show the cash to the shareholders.
Yeah. Okay, that sounds like a solid way forward. Look, George, we'll leave it there, but thanks indeed for joining us online there with an update from Angus Energy. That's George Lucan, the Chief Executive of the company, and hoping for better things as we look out towards the rest of 2020.